silver moved from $26 to almost $33 in under 3 weeks is really significant because we've seen gold make a series of record highs. We've not seen silver follow suit. This time, we've seen silver move along with gold with larger percentage gains, and the declines have been about on par with the percentage declines of gold. It's been exceedingly strong. And so the key is it did break above 30. It traded to a high of almost 33. The key to me is maintaining a price point above 30, specifically 29.50 is really important. But 30 is going to be a point in which some sellers could emerge a break below that.
Commerzbank's latest report includes updated forecasts for silver and gold prices, reflecting a more optimistic outlook for silver. The bank has raised its projections for silver prices to $30 per ounce by the end of 2024, up from the previous estimate of $29. For the end of 2025, Commerzbank expects silver to reach $32, compared to the earlier forecast of $31. GaryWagner, editor of thegoldforecast.com, acknowledges the impressive surge in silver prices, but cautions that it sets the stage for potential significant corrections. He advises investors to brace for volatility, as sharp price movements, both upward and downward, are characteristic of silver's market behavior. Despite the bullish forecasts, the outlook for silver remains uncertain as investor confidence wanes over the Federal Reserve's return to policy normalization in the upcoming September meeting. Recently, silver touched the $30.06 level and found solid support, showing a slight bullish bias. However, it is expected to resume negative trades, potentially breaking below this level to target the next correctional level at $29.30. Wagner highlights a remarkable trend where in under 3 weeks, silver's price surged from approximately $26 to nearly $33. This rapid increase is notable given that gold has also been setting record highs, albeit without such dramatic percentage gains. Wagner points out that while gold might experience moderate gains, silver often surges by much larger percentages. This underscores silver's higher volatility and its potential for rapid price movements. Adding to this perspective, Peter Schiff tweeted on May 17, 2024, that silver is up over 30% in 2024, trading at its highest price since February 2013. Schiff emphasized that silver, a precious and industrial metal, is an even better indicator than gold that inflation is accelerating. He criticized the Federal Reserve's stance, suggesting that investors might be underestimating the impact of inflation. Join us as we delve into Gary Wagner's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
You know, silver's been interesting because the percentage gains recently have been enormous. In other words, when gold was moving up 1%, 0.75%, silver was moving up 3%. Here is a 4.5% move, just shy of 3%. It hit a high that has not been seen, and we really have to go far back, but it's not been seen really since February of 21, and this top here, which comes in May. So it's been a long time since we've seen silver hit this exaggerated high, and to go beyond that, we've really got to go back into August of 2020. So it's been a long wait for what I'll call silver stackers out there. They have been waiting for a move like this. And considering that silver moved from $26 to almost $33 in under 3 weeks is really significant because we've seen gold make a series of record highs. We've not seen silver follow suit. This time, we've seen silver move along with gold with larger percentage gains, and the declines have been about on par with the percentage declines of gold. It's been exceedingly strong. And so the key is it did break above 30. It traded to a high of almost 33. The key to me is maintaining a price point above 30, specifically 29.50 is really important. but 30 is going to be a point in which some sellers could emerge a break below that. What I can see is when we look at major bottoms, nothing comes in until the beginning of this rally. We do have this resistance area that comes in at 29.5, which is why that's an important number to me based on these particular tops back in April. But we had such strong moves, and although they weren't true price gaps, because you do get this wick, the wick is the differential between this real body, which is the open and close. In green, it means it closed above the open. In red, it means it closed below the open. But the fact is that you had a price void, in essence, here, a very small one here. And so it really gapped higher in a very, very, not violent, but exceedingly strong manner. And it, to me, showed pent up buying demand emerging once we got real breakouts above 29, and it took it way past 30. Silver has been impressive. Well, whenever you get a surge that takes up gold or silver, any of the metals, dramatically higher, when it does hit a scenario in which market participants believe that it's overbought, it's going to come down as significantly as it went up. So a brilliant move up calls for a dramatic move down. You typically don't get a mild or tepid price drop or correction following a surge. And really, if you look at this, this is a real surge. I mean, you're looking at, in a period of under a week, going from 28 to 32.75. That's a huge move.
The gold market has rebounded from its nearly 2-week lows. Still, solid activity in the U.S. manufacturing sector could weigh on the precious metal ahead of the Memorial Day long weekend. This scenario reflects the complex interplay of factors currently influencing gold prices. GaryWagner suggests that the recent market reactions might be overreactions or knee-jerk responses to the Federal Open Market Committee minutes. He noted a significant drop in gold prices, with a $33 decline one day followed by a $50 drop the next, totaling an $80 decrease. This volatility underscores the gold market's sensitivity to economic signals and policy announcements. On Thursday, gold experienced choppy dealings, remaining little changed amid conflicting signals. The firm dollar applied pressure on gold prices, while weak U.S. economic data spurred safe haven buying, fueling hopes that interest rates might rise. Despite these mixed influences, gold was on track for a 3.1% weekly gain, the largest since March, benefiting from a pullback in the dollar over the past few sessions. Wagner identifies key technical support levels for gold, highlighting real support at around $2,300 and tentative backing at $2,320. These levels are crucial for investors to monitor as they indicate potential points where gold prices could stabilize amidst ongoing market fluctuations. Let's get back to the interview.
The dollar has been up for the last 6 trading days. And during that time, we had gold move higher with the dollar moving higher. And then, of course, over the last 3 days, it came down substantially. And so it's almost been as though the dollar hasn't played a significant role. And the key is that all of the precious metals are paired against the dollar. There's 100% inverse or negative correlation between dollar strength and how the metals do. A strong dollar will take gold, silver, platinum, palladium, all of the precious metals lower based upon the fact that it's paired against it. But whereas we saw dollar strength while gold and silver were moving higher. We saw dollar strength as gold and silver moved lower. So the dollar has not been the most important factor, but rather buyers or sellers dominating the market. Well, I believe that we're seeing an overreaction, a really strong knee-jerk reaction, because we were down $33 yesterday and another $50 today. So that's an $80 decline directly attributable, I should say, to the release of the FOMC meeting minutes. Those minutes, as I talked about a second ago, came in prior to new information conveying the opposite or what the Fed actually wants to see. So on a technical basis, real support comes in at around 2,300. That's these series of bottoms that came in May and then April here. But the fact of the matter is we could see gold find tentative support roughly at 2320. That's the next target that I have, and we're currently at 2331. Of course, I'm looking at June futures. What we'll want to see is we've got good volume, but we also have a holiday weekend coming up. And so that will always add some volatility to the market. But I'm not convinced that we are witnessing a full-blown correction yet. It's certainly more than a one-off because we've seen the second day and it's a very, very strong decline. But the other thing that's noteworthy is it's not a decline from gold in a mid-range, in a price point it's been to before. This decline is occurring immediately following a new all-time record high. So it gives shorter term and interim traders the ability to pull profits based on the recent move. And the recent move really was from about 2,300 up to 2,440 and above. And so $100 in terms of a decline over, let's say, the last 2 days in perspective is not that great. So I'm not convinced we're looking at a full-blown correction. But if it is a correction, this is how it would look at the beginning. So we need more data to determine, and we need to see what the fundamental reports that are upcoming over the next, say, 3 weeks as inflation reports come in again, and we get some signals from the Fed as to what they're going to do in regards to rate cuts, the magnitude, meaning the amount of cuts, and the timing of those cuts. They've pretty much taken a rate hike off the table. And that, of course, is very, very bullish. But rates are high now.
As we observe the impact of solid U.S. manufacturing activity on gold and the notable surge in silver prices, it becomes clear that these precious metals are influenced by a complex interplay of factors, including Federal Reserve policies and global economic conditions. How should investors adjust their strategies in light of the recent volatility and revised forecasts for silver and gold? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.